Greetings and thank you for joining me at the Victory Independence channel and FutureMoneyTrends.com. I want to make a short video about the hike, the coming imminent rate hike, because there is such a grand recovery. I have said for years now that I didn't see a hike coming until the 2020s, maybe even the 2030s, because they can't. They can't really raise the interest rate. The situation with the debt is so bad. I mean, you really have an adjustable rate mortgage for the U.S. national debt. And if rates go up, all of a sudden you're paying $300 billion in annual interest. It's going to go quickly to $500, $600, $700 million in interest, maybe even $1 trillion. Now, they're going to raise it, and it's just going to be like a quarter-point raise. The Fed has already said the next one won't be for a very long time. But I think they'll have to reverse that decision sometime probably in late 2016, maybe early 2017 because of the presidential election, which also I think makes it even more dangerous because the Fed and the central planners are going to have a lot of pressure coming from the White House to keep the damn thing together just one more year. Like Obama's going to be like, don't let this thing fall apart on my watch, like it happened with Bush right at the end of his term. So they're going to be doing everything they can to hold it together. The bad news is, of course, that will obviously make the problem much worse. But hey, you know what? You never know. It could even be worse if it happened, because let's say it happens in 6 months. Imagine what they're going to unleash during a presidential election year in order to stabilize the economy. So it would be probably pretty aggressive. Okay, so raising rates, it's almost so little, it's nothing. However, it is something. And what's interesting about it is, if you look at the 1970s when interest rates rose, you saw a big move up in the gold price. When you look at the early 2000s when interest rates rose, you saw the beginning of the gold bull market, of course. And one thing I want to discuss with you guys, and just kind of leave it out there for us to discuss, is just as myself included, and without getting into the price suppression and the paper manipulation that goes on, because I know that's very significant. But just as everybody, the market, thought that the most likely scenario from QE and low interest rates and massive intervention by the central planners and the Federal Reserve would be a very high gold price. I did the math, made sense, right? Now, there's a definitely a constant price suppression scheme going on. I mean, you look at 10 years ago, it used to be about 50 ounces of gold, of paper gold, digital gold, for every 1 ounce of real gold. Today it's 294 ounces to every 1 ounce. And the 50, the average there, it was there for multiple decades. And then right around 2011, when QE and everything kind of started to wind down, man, that thing just shot up. So anyway, my point is, it's very interesting. Just as everybody thought something and it became the opposite, which is very normal actually, with the crowd mentality and how markets function and work. Here, everybody thinks that an interest rate increase is going to be the death of gold, when gold's already been dead for like 3 or 4 years now. It's just been a bloody mess for people. So I'm just going to put it out there. I mean, this is pure speculation on my part. I mean, I could give you a million reasons why I think gold's going to go up and the fundamentals for it. And, looking at the low valuations for the mining companies, the supply destruction, the demand, the physical demand is surging, gold coins, physical bullion. That aside, let's just speculate here. The markets as a whole, the consensus was that you'd have QE, you'd have low interest rates, and gold would spike. You'd have a debt crisis. What did the S&P 500 lower the U.S. at? Wasn't it? Gosh, it was low. I think it was like 14 trillion or 15 trillion, and now we're at 19 trillion. All those things, and consensus was that gold should do well. It did horrible. Again, big asterisk because of the manipulation. However, consensus is rate hike happens, gold's going to do horrible. Gold's going to go to $900. I'm going to gamble on this one. I'm going to just put it out there. You know, by the way, if I'm right, I am going to tell everybody that I was right about this forever. So just remember that. Of course, I'm just kidding with that one. So anyway, actually not totally kidding. Of course, this will go down as one of my greatest calls, right? Okay, so they're going to raise the rates next week. If that happens, we're still not certain of it, but if that happens, which it looks like it's going to happen, let's see if gold surges. Let's see if that's the marker for the new bull market in gold. Because the consensus is, the crowd mentality is that interest rates go up, gold's going to go down. However, historically, you look at interest rates go up, gold actually does pretty well. And here, the consensus was interest rates low, QE, good for gold. However, gold went down. Silver went down. Now the consensus is rates are going to go up, gold's going to get killed. I'm gonna take the other side of that bet. I think rates go up next week, and that's the marker for the new bull market. Well, hey, if I'm right, please remember this video and share it with all your friends. If I'm wrong, no harm, no foul, right? Hold some physical gold for insurance. Don't speculate in the gold market. If you want to own gold and you think gold's going up, own gold. If it has a gold in the company stock, as Rick Rule would say, doesn't make it a gold investment. But if you want to own gold, own gold. If you're looking to speculate, look at the mining companies. But I think rates go up next week, and that's the marker for the new bull market. You guys have a great day.